Hey, what's going on, everybody? Welcome to Bonafide Investing, where we talk all things high yield investing, options, futures, investment goals in general. If you're new to the channel, welcome. To give you a little bit of background about what we're doing here, I have been experimenting with high yield strategies for about a couple of years. After some trial and error, owning hundreds of closed-end funds, ETFs, what have you, I have built what I call an all-weather high yield portfolio that I've called Cash Flow Life here, that seeks to, number one, pay my bills, and number two, maintain and pay down the margin used over time. Taking about 20 to 25% of my net worth into this. So I take it very seriously. This is not the only way I invest, nor do I think it's the only way anybody should invest. However, we focus strictly on this in these videos. So if you are a high yield investor, hoping you get something from the videos and the content here. Please hit like and subscribe. Please help support the channel. If you like what we're doing, please know that everything discussed here is not investment advice, not now, not ever. So please do your own due diligence before making any investment decisions. So it's Saturday. I want to give some portfolio updates. What a wild week, and what a way to close out the week with gold and precious metals getting absolutely smashed yesterday. I don't think there's a term for it. I think it was long overdue. And I've said many times in many other videos that, gold is my favorite asset. It is God's money. It is insurance. But I like to see it go down, right? The lower gold goes, typically the better your standard of living is. Usually that means there's more certainty, usually less inflation, usually fewer geopolitical and macro risks in the system. So again, I have been wrong on gold. I thought back in December, gold would be in that $3,500 range. I think we're potentially headed back there. But it's nice, considering Cash Flow Life is about 20% in gold or gold related ETFs, GDXY, GLDY, IAUI, IGLD. And then a lot of these other funds, KYLD, even ULTI, YMAX. So they have a lot of gold and gold miners exposure as well. So again, I like that I'm going to be reinvesting back into gold at lower prices, right? So that's the benefit. I am dollar cost averaging $200 back into Cash Flow Life each and every day. I have about a 20% target on gold overall. So that's about $20 per market day back into these various ETFs. Speaking of dollar cost averaging, I think what I might do moving forward is, I've said I think volatility in 2026 is going to pick up. I think that we are going to fall. I think we're due for at least a 20% correction, if not more. I am in the camp that we will have a Great Depression 2.0. Nobody knows when that's going to happen, so I don't worry about that. That's why I keep this strategy diversified and hedged, okay? I think what I'm going to do dollar cost average wise is on down days of 1% or more, I'm going to double my $200 to $400 at the end of the day. So what Robinhood does, they dollar cost average back into all of these ETFs for me. There's about 5 I don't reinvest into. WPay, I did make a switch. So I sold some WPay and put it into YMAX to kind of balance out the portfolio. Just because WPay is leveraged. And I think if there is some downside, that 1.2 to the downside, I think will take down the portfolio even more. It is the one holding I have when it comes to these ETFs that is higher than 25% margin maintenance. Now, it is 30%. It's nothing I'm going to be concerned about, but having a little bit more of that buffer is nice as well. So I'm going to do that. I'm going to double the $400 for each red day down, I think of 1% or more, just to take advantage of down days. Now, the good lesson for Cash Flow Life yesterday, Cash Flow Life was down about 2.5%. Okay. And the majority of that was from the gold related ETFs. I think it was down about $11,000. I think 9,000 of that was due from the gold piece alone. There was some, down from the crypto and some other things, but The market was down yesterday. So overall, that was just from the gold getting hammered. Now, the good lesson in this is that my margin buffer only fell about 1%. It fell roughly 1%. It was about 61 and a half. It's down to about 60 and a half. Okay. Now I like to keep my margin buffer again above 50%, 50. So being over 60% is even more, is even more beneficial to me. So, with the market selling off hard, especially gold, that's pretty reassuring that I can go down 2.5%, right, through Cash for Life and have my margin buffer only get hit about 1%, right? So again, that's the benefits of diversification, getting that income often, right? Whereas when you're a growth investor, you've got to kind of time the markets. When do I sell shares? When do I take profits? When do I do this? And again, I have other strategies that involve growth. I'm not anti-growth, but when it comes to paying your bills and living out of a brokerage account, I'm still in the camp that high yield is the best place to be. Okay. So again, back to gold. I think gold could fall, 4,200, if not more. I think below 4,000 is a possibility, just to wash out a lot of the froth and excess and speculation. I don't think yesterday is brutal as it was. Wash it all out. I think silver could still go back down to the $50, $60 range, but I think more realistically, we'll probably see silver in the low 70s is probably where it's headed back to. So again, having consolidation is healthy. It's needed, not just in precious metals, in all markets, right? It gets out the excess, the froth, lets everything reset so that quality assets can regain their trajectory upward over time. I made a video on cash is trash. Check that one out. Love to hear your thoughts and comments on that. So just some updates here. I want to give some numbers on Cash Flow Life. As of the end of this week, total annual income, if I annualize it all, we're at about $150,547.25. That is on a total value of $620,740. Okay. So if I were to annualize that yield right now, we're sitting at a annualized yield of 24.3%, which was pretty in line with last week. Income did come down a little bit. That's okay. Main reason is that volatility is still been low. I think volatility might be picking back up, which should increase premium income. But volatility has been low. Roundhill has had really low distributions since their monster distributions the end of December. No big deal. I think it's prudent. Some of the ones I've been, a little bit more disappointed with lately, especially WPay. That's why I did trim my position there. But I think overall, I think YQQ has been a great hedge. I'm hoping KYLD figures out what they want to do in the miner space. Miners got absolutely crushed yesterday. But, again, this is why I do like gold over silver. I think, gold fell about 1/3 of what silver fell yesterday. So gold is far less volatile than silver. Silver, has more of the fireworks, has more of the, jaw-dropping moves to the upside, but it also has the same to the downside, right? So gold is a little bit more steady Eddie. Again, it's God's money, right? It's I think the number one asset on earth. It's the only asset with no counterparty risk, period. So again, have gold exposure is what I tell people. Again, not financial advice, but everybody should have a little bit at least, even if you want to buy a high yield ETF, like an IAUI or a GLDY, for example, to get paid on that gold exposure. So that's just some of the updates here. Overall, my principal is at 462,514 roughly. The margin used is about 161,000. Some of the moves I'm going to make, again, I dialed back my WPay from $30 a day to $20. I increased my YMAX from 10 to 20 per day. CRF has been a great steady Eddie as of late, especially for how poorly the Magnificent Seven have been doing. I really like how CRF has held up, paying that 17 to 18% distribution. YQQ has been a great hedge, especially for my SPY and Qs. My QQQ puts, my SPY puts, again, that's crash protection if the markets do go off a cliff, which I'm in the camp that they will at some point. Again, I don't try to time markets. I had a good comment about my Boyle call. Yeah, I sold my Boyle call. Usually what I do on calls is I like to sell them if I've made about 100% or more on them. I don't like to, pig out. Again, nobody can time markets, right? That gain can turn into a loss just as quickly. Pigs get fed, hogs get slaughtered. It's an old adage in the financial industry. So, yeah, sure, I missed some upside. No big deal, right? It is what it is. If I make a gain, I'm happy. And speaking of natural gas, I think it's getting a little bit long in the tooth here. I might be buying a call on KOLD here soon, just to speculate that natural gas cools off here for a little bit. The oil calls, so far so good. I'm up quite a bit on USO, XLE, and XOM. Again, I think energy will have a monster 2026. That was my spec play. We also had Kevin Warsh be nominated by the president to take over the Fed in May. What's interesting is that, I've been right in one area and wrong in one area. I've been right that the long rates will continue up, and they have. What I've been wrong on is how little volatility there's really been. I thought rates would have been back to, we posted that 4.5 range. We're sitting at about 4.25 on the 10-year treasury. So I was wrong on maybe the level, but I do think that rates will continue up no matter if the Fed cuts or, stays on the short end. Because again, the Fed cannot control long-term treasuries. So if you have a mortgage and you want to refi and you think that the Fed cutting is going to lower mortgage rates, that's not how any of that works. So just be aware of that. I think there's a lot of misunderstanding, misconceptions around that piece as well. The Qs, all my Q ETFs here doing their job. Same with XDTE and SPY-I and RDTE. The Russell outperformed the NASDAQ and the S&P 500 by about 5x through the month of January of 2026. So Russell's had a good run. I expect it to cool off like we saw yesterday. Bitcoin, I don't know, can't get out of its own way. I don't know what to say about Bitcoin. So yeah, I think Bitcoin might even stay in a bear market till all throughout 2026, at least the majority of it. But again, I'm dollar cost averaging back into YBTC. Want to see how it does. Again, this is just something that I'll cut loose if it's a big loss, take that tax advantage, redeploy that cash into something else. Ulti and Salty, why did I go back into those? I wanted to build my own long short fund, just of high yield. And so again, that's just for pure income. I'm not worried too much. I'm well aware of the NAV erosion. So don't worry about that. But overall, pretty happy. I did up my dollar cost averaging to IYRI. I wanted to bring that up a little bit as I think that's underperformed the stock indices as well as precious metals. And I did bring down my dollar cost average from IGLD and IAUI to put it into IYRI. So happy with that move. Real estate held up pretty well yesterday. So overall, happy with the diversification, happy with what Cash for Life is doing. It is accomplishing the goals that it has been constructed to do. Again, this is my pension, right? This is my business, right? It's basic. I've owned businesses in the past, sold them in the past. It's not an entirely difficult concept, right? It's Cash for Life as the business. It will, ebb and flow with market conditions. The employees are my ETFs and my closed-end funds. That's the income generated from the business. The business expenses are my day-to-day bills. Everything from my mortgage down to an ice cream cone and everything in between comes out of Cash for Life, right? Is all the income stays in it. So, performance-wise, I'm not here to get greedy. I'm not here to speculate too much. It's just need over greed. It's just how can I pay my bills? How can I do the things that I want to do to not have to, do the 9 to 5. I can pursue hobbies. I can spend more time with my kids. I can travel. I can do what I want. So that's the goal of this, right? And I didn't put all of my wealth into this, nor do I think I ever will. But if you're in the high yield camp, I've said before, figure out your why. Why are you doing it? Is it to live free from 9 to 5? Is it to have a side stream of income? whatever that why is, know that before you start, right? And then figure out how you want to allocate, what your risk tolerance is, and how you want to go about that. So anyways, want to give a portfolio update. I'll be making another video or two this weekend. Hope you got something from today. Have a great day.